Hey everyone, welcome back to another episode of the 6-5 podcast. It is Friday, episode 239. Pat, can you believe 239 times now we have gotten together to do this podcast? And that doesn't count the thousands and thousands of on the roads and insiders and other events that we've done here on the 6-5 Pat. But it's a great week. It's been a banger. I mean, look, I guess there's two sides of it. You know, we aren't financial analysts, but we do know that every quarter there is this inflection, this moment of truth, and it hits when all of the earnings hit. And thank you to November 5th, our upcoming election. Everybody, almost everybody, there's a couple that are going to go next week, Pat, but almost everybody decided to do it in 1 week instead of 2 weeks so that we could just be absolutely bogged down every day at 4 p.m. Central Time, reading results and trying to synthesize, tweet, and go on TV. Buddy, how are you doing?
Doing well. You know, it's been quite a run, right? You know, Sunday night I was in frickin' Seattle, did Seattle Monday, flew down to LA, did LA Tuesday, maybe just Tuesday or Tuesday, Wednesday. I forget, they all blend. But yeah, I've been on the road for 2 months. I went back and checked my calendar. I had not slept in my bed for 5 days contiguously for 2 months. So it's been quite a run, but super exciting, you know, sticking with the low-no drinking, getting sleep, high stress. My stress is maxed. It's eustress, not distress, and hitting the weights pretty hard. I am literally, my entire body is aching at this point. But no, it's earnings palooza. I mean, it's on the pod. You and I are both on the ground. I mean, it doesn't get any better than this. Our love affair continues.
Yeah, so. Dude, your pecs are looking great right through the camera. I just want to point that out for everybody. Everybody, make sure you give Pat a couple thumbs up on his great pecs. He's been hitting.
What are you talking about?
He's been hitting the weights pretty hard, and you know, we got to make sure we keep him motivated by telling him consistently how good he looks. That's how it works in these places. But I know that's not why you're here. At least I don't think that's why most of you are here. You're here to get the takes on earnings, and this is a banger of a week. There were a lot of earnings. There were some smaller companies that we do cover. Companies like Commvault actually had some really good results, Pat. But like, yeah, we, you know, when it comes to time to talk about what is going on, everybody wants to hear about the mag name, the big chip companies. And this week we got it all. We got Google, we got Microsoft, we got Apple, we got Amazon, we got 4 of the Mag 7. Plus, I think Tesla went last week. We don't talk a lot about Tesla. From time to time, we'll jump on that ship, but it's somewhere in between for us. But then AMD and Intel went over 2 days. We talked with Pat Gelsinger. We talked with Lisa Su. We talked to executives across these different companies. We've got the inside scoop, Pat. We know what's going on. We've got an assessment. You were on what? CNBC, Yahoo Finance, talking to, you know, the press, the media. I went to New York. I toured the town. I went on TV with Woz, you know, it was me and Woz, you know, because I mean, there was a good lineup, but I mean,
where was the selfie, buddy? Selfie or it doesn't count.
No, he was actually remote. It was all a big hook. You're going to be in studio with Woz, but Woz was on the, you know, if I was Woz, I'm not traveling to do that. I'm sitting in my office. You're coming to me, baby. You're coming to me.
In my office, wondering why I didn't hold my Apple stock. All right.
Well, it's right there next to your AMD stock. So, and that's why you're going to have to keep working, buddy.
Dan, you can't do that. Like, you can't do that. I'm trying to choke down my 25 pills in the morning.
Yeah.
Like I'm only halfway through this delicious feast, and I almost spit it all out on my.
If you want Pat to sometime tell you what his AMD stock would have been worth if he'd had the gall to just let it ride. But we're not going to do that today, but go ahead and put it in the comments. If you're interested in knowing what I don't even know if he's ever figured it out actually to the metric, because it might be so difficult to digest. You ever seen those graphs where it's like, if I buy and it shows it going down, then it goes, if I hodl and it just goes sideways forever. And then it's if I sell and it goes straight up. It does feel that way at times. It definitely does. Now, we are not an investment show. This is not investment advice. This is 2 industry side analysts in our firms, and we're providing our perspectives on these companies. So just know that this show is information, entertainment. Do not buy stocks because of this. But Pat, you and I were really on the fence about how the Intel thing would go. And then I think I texted you right after it hit, and I'm like, dude, it's up. And you were like, what? What happened with Intel? Give me the rundown.
Yeah, so this file this under things you didn't expect, because when I saw the raw numbers that came out, EPS was off by like $3.80, and I'm just like, oh, okay. And in my mental model, typically is okay when you have write-offs or impairment charges. I'm thinking that doesn't make its way into adjusted EBITDA, right? Not adjusted EBITDA, but non-GAAP EPS. So, but after I went through and did my own financial engineering, and then you texted me, I'm about to get on Yahoo Finance. It's like the stock's up 10%. It pretty much blew my mind. But here's what the street reacted to. So first of all, really good operational performance with a good guide. They beat on revenue by about $260 million. And, when you dig into, they had a $15.9 billion impairment charges, 3.1 billion, I think, showed up at the non-GAAP EPS line. And then, without all of that, right, margins would have, been in the 40s. And they had a better than expected EPS, which the expected was a 3-cent loss, turned it into a 15-cent profit. But anyways, with all that stuff, the stock ripped, and then kind of got back in my chair, and it's like the fact that there wasn't bad news, nightmarish news like the quarter before. The stock ripped, and it's priced at well below book value, and they do have tangible assets, not just a bunch of goodwill. They have literally property, plant, and equipment. For those of you who ever took accounting, PPE. So, but here's some of the highlights here. And again, according to the company, 5 nodes in 4 years is on track, and 18A is the turnaround node. Okay. And it's not all I care about, but it's all I care about, because in the end, you can have an okay design and a kick butt process and transistor and do pretty well as long as you've got volume flowing into the fab. And at a time that TSMC is raising prices, it's getting investigated by I don't know. It's maybe not the Department of Justice, but maybe it's CFIUS for selling parts to Huawei through a third party. All this looks good for Intel. The $10 billion cost reduction plans appear to be on track. People got pretty frothy out there on the interwebs talking about another 16K, but it's not another, 16K on top of the 20K or the 20% that they talked about. But it's all built in. So let's break down some of the businesses. PCs were down 7% year over year. AMD has likely took unit share on that. They had a pretty strong Ryzen 9K sell-in to the channel. We're going to be talking about AMD a little bit later. The company, made its point that says, hey, we're going to be shipping 100 million AI PCs by the end of 2025. That's the scale at what they're doing, and is likely going to be quite higher than both AMD and Qualcomm, unless things change. Hey, data center and AI, baby, up 9%. Thank you, Xeon. They launched Gaudi 3, but I don't think that's reflective in the numbers. Pat Gelsinger did take that Gaudi 3 number down. Dan, you can talk a little bit more about that. Surprise, network and edge, albeit a smaller business, was up. That sector has been in the toilet forever for everybody. And it's good to see some year-on-year growth there. Foundry down 8%. I don't even care about that. It's a small number. 18A hasn't kicked in yet. And quite frankly, those are nodes that weren't built for other companies. It was built for Intel.
And I think it's up sequentially too. I think it was just year on year. So they had some good sequential numbers, which Sometimes
So, yeah, final point here. I'll tear it down 44%. It's a lot larger than I thought. I know the market's rough. We're going to have to see, exactly, what other people in this sector, and not just the other FPGA companies, but in this industrial sector. That sector's been in the toilet, but we have seen some quarter-on-quarter growth once everybody cleared out their inventory from people like On Semiconductor, ADI, Renesas, folks like that. So all in all, stocks ripping, right? No disastrous news is good news. And you got to give Intel credit, good operational performance and a solid guide, and they beat on revenue.
Yeah, there you go, Pat. I mean, look, I think you and I were both kind of pondering on this impairment, what would happen. Like, holy crap. Because when you first look at the numbers, you're like really bad. It actually gives me some hope for AI and algorithms because it seemed like there was no delay in the ability for it to figure out that these were one-time impairments. There's always a little bit of confusion because the impairments were actually much bigger. It was like 16 billion. And there was about 3 billion that did not, about 3 billion that they were not able to sort of disclude from their non-GAAP number. And I always kind of wonder, you and I aren't accounting. We're not Ernst & Young. We're not running away. And I don't think this is super micro. But the point is like, how does things end up in the impairment and what ends up in non-GAAP, what does not? But the TLDR is they were thinking 3-cent loss net of all of these things. And they got to like 15, 16 cents. And I kept doing the math and it kept ending up a little bit different. But it was in that range.
I know.
It was in that range. So the point is I think the market is kind of asking the question, can the company make money in under normal circumstances without all these impairments? And the signal there was, yes, it can make money even with the foundry if it doesn't have to continue to take these impairments. You also got to remember the company's made like $30 billion of investments in the last 2 years since the CHIPS Act was announced. And you know how much money they've gotten from our very efficient government?
Hang on a second. I haven't taken all my pills yet, dude. That's not fair.
Yeah. Well, it won't take you a long time to get to the fact that it's this much. Zero, not a penny has been paid yet. So, they're doing things, and to their credit, they should probably get more credit than they're getting because they've actually continued to push forward, make these investments. Look, there's not a lot in the numbers that got me super excited. I'm not going to sit here and be like 9% or 11% data center growth. I mean, AMD had 122% data center growth. It's hard, but growth is better than not growth. And I think when you're, playing sort of limbo off the bottom, instead of going under the bar, they're stepping over it. And that's good. I mean, that's the step they had to make. I mean, the Gaudi thing that you mentioned is a transition from generation to generation. Gaudi 2 is okay. Gaudi 3 looks like a much stronger product. Now, Pat went on Bloomberg after I did. I warmed it up for him. He went on after I did. And he talked about this, the software flexibility, programmability of Gaudi versus these bigger, sort of flexible, programmable GPUs. And he talked about kind of the roadmap is that Intel wants to get there. But in the meantime, with Gaudi 3, they're working on more programmability, more flexibility, that it can do more of the things that need to be done. I like that product in the enterprise. I know IBM Cloud is doing something with it. I think where it's going to potentially be successful is in the enterprise. It could be a nice hedge. In the same sort of areas where I think Instinct could do well. It doesn't have all the same characteristics, but there are these certain workloads where cost and performance and efficiency, and Signal 65, I'll have more to say about that soon. That's our testing performance lab in case you have not bothered to read any of the stuff that's come from them. It's great stuff. So that's kind of where it's at with that, Pat. The client numbers, I'm so conflicted on what's going on with client because we're not really seeing that AI PC liftoff that I think everybody had thought. It's looking slow. But again, the features haven't really come out yet. And I keep talking about this next generation is going to be software driven, not hardware driven. And so you got something there. What do you got?
No, I mean, it looks like recall got pushed again. I mean, my gosh, it was supposed to be out in June. And I get asked this all the time. Well, Pat, you get up on stage and said the super cycle was going to start in the second half of 25. What's going on? You know what? The software got pushed back 6 months, and the features that were pulled to the front are not nearly as compelling as the killer app is going to be. I mean, we're seeing the same thing with Apple, and we're going to talk about that. So yeah, I just needed to get that out.
No. And again, we make our assessments, our market models. We drive our sort of perspectives on things based on information we have. And we have a lot of insights and we get a lot of information, but dates get changed, dates get pushed, products get pushed, and of course, revenues will follow. You can't sell something that doesn't exist. Vaporware does not particularly sell all that well. It does create a lot of enthusiasm, though. So if people want to be enthused. So that's kind of my TLDR on what went on with Intel. I think it was a surprisingly good quarter for Intel. Last thing I'll say is keep your eyes on the policy gods. The policy gods are the catalyst of the Intel foundry business. Pat said they're going to keep it together. There's a value in this sort of separation of the companies from a standpoint of governance, but at the same time, there is value in having the two arms of the business. We need a strong US-based chip manufacturer to put out some double-digit percentage of leading edge, and that isn't TSMC. They don't meet the requirements. Samsung's having its own woes right now, and I do think if Intel can get its act together, all roads lead to Intel for a nice opportunity for growth in foundry. So we'll leave it there.
Hey, can I actually, just to make a long story longer, something came up on the call that I thought was super interesting. Pat said he's got two new compute-centric 18A customers. So I think the Microsoft and Amazon ones that were disclosed, I believe, are networking. One of them was publicly disclosed as networking. I believe the Azure one is now networking, not Maya. But anyways, I'm trying to think who these two compute folks could be. I mean, my gosh, how provocative is this? Is it NVIDIA? Is it, something off of Marvell XPU, Broadcom XPU? I mean, very, very provocative.
Yeah, well, let's see. I might know something, but I can't tell. I'll never tell. Anyway, all right. So let's.
What do you think it is? I mean, if you got something, spill.
Can't spill.
Huh?
I can't.
All right.
Maybe I'll spill to you later, but I can't spill.
All right. You don't.
All right. Hey, everybody out there, don't get too excited. The great reveal isn't going to happen here today, but we are going to have to carry on because there's so much more to cover. We're kind of, we went Intel first, which was actually yesterday. Now we're going to kind of go back in reverse, kind of through the order of the week a little bit more. Google started the week, Pat. And so let's talk about the Google macro, right? They've got the FTC up their rear. They're getting pushed on, there's people trying to break it up. There is some concerns that it's abusing its monopolistic powers. There seems to be some concern about the company's, long term. There's a whole bunch of new search disruptors. We're hearing meta search, OpenAI search. Everybody's got a search. And we've seen this story before. Microsoft had the ChatGPT and Bing, and they were going to start eroding Google market share. And I mean, I'd call Microsoft a pretty formidable competitor, and I don't recall a whole lot of market share being ceded. Old habits die hard, folks, and Google has done a pretty good job. We could argue about the models, we can argue about the accuracy, we can argue about the quality, but their generative AI search returns inside of Google search is pretty well embedded at this point. So people are getting that sort of ChatGPT experience in Google. You and I are nerds, so we play with everything. We compare quality. That's our thing. But the average user, when I'm asking my mom, she's not switching off Google, and especially all the iPhone users that are default, unless they stop that from happening and that actually gets stopped. That will always play a huge role, is that on pretty much every mobile device in the world, the default search when you just type something into your search bar is always going to be to Google. That's 100% of the market share, folks, right now. So that's really, really interesting. But how did they do? I mean, look, it was a really good quarter. It was really clean. I mean, they beat on EPS, they beat on revenue, they beat on advertising. They, manage their costs pretty well on traffic acquisition, Pat. But I think the part you and I want to talk about, we like advertising. It's cool. We get a little bit excited about that search technology. But dude, cloud number. This is a over 40 billion a year run rate. Pat, you remember when it was like less than 10 total a year run rate? This thing has absolutely reached the inflection point. AI changed the order of operations for cloud consideration. It opened the aperture to multi-cloud in a big way. Companies kind of really started leaning in, doubling down. They had a decade plus of investment in building their own silicon, which they're starting to gain advantages and profitability efficiencies, lower costs. They're not as tied down and dependent on getting access to the NVIDIA. They're training their own models on TPU. They've absolutely had the chops with Brain, with DeepMind. They've been doing this for a while. So while others were talking about it, others have bought their way into it. They were doing this, and I think it's starting to really bear fruit that they have this kind of lineage of AI in their business and in their model. I mean, Pat, $2 billion of profit income contribution in one quarter from Google. You remember when we were going in, will they ever make money? How long can they keep pouring hundreds of millions of dollars a quarter into this thing? Now they're making money. And this is the thing about the Mag 7, I'm going to say, is all these companies can basically buy the market right now. And so when you talk about disruptors, my concern is that these 6, 7, 8, 10 absolutely can buy their way in with CapEx. They can buy their way in with energy. They can buy their way in with silicon development. They can buy their way in. So it's going to be really, really hard for disruption to take place. But at the same time, it takes more than a decade for the regulators to do anything meaningful. So there's no way they can stop it. Our system is just super inefficient. So if I'm an investor, I'm looking at this and going, this is really great. And by the way, Google was trading at a really low multiple. It was like 19 times forward. It was not trading at a super high premium. So there's a lot to be excited about here. Unless you believe regulators can really break this thing up, and I just don't buy it. And if they do, there'll be so many appeals. It'll go on for so long. It won't get done. And, and onward. And by the way, even if they do break it up, we'll come back to this later and I'll pass the baton over to you, brother, is even if they do break it up, who gets all the benefit? It's another Mag 7 company. It'll be Facebook. It'll be it'll be Amazon. Darn it. I just wrote the episode. It'll be Amazon. Like Amazon's a 40-something billion dollar advertising juggernaut now. So where does it go? I mean, so anyways, Pat, the worries are overinflated. The results were freaking terrific. And it's hard to say a lot bad about this. These cloud companies had really clean quarters.
Yeah, lest we forget that Google created the first research paper on generative AI. They didn't move forward with it because they thought it was too spooky. And then OpenAI comes in and Microsoft latches onto it, and it's pretty much throwing in everybody's face. Bard comes out. That's a disaster. Gemini 1 comes out, and it's doing pretty suspect results, particularly on images. And then Gemini got updated, and it starts to get better. Now, if you look at the challenge that Google has serving up trillions of search results, you can't just put hardcore GPUs across that, because you're going to run out of money, and your profit's going to go in the toilet, and your stock's going to tank, right? So they had to come up with something, and that something was the TPU. Okay, the TPU, like Gaudi 3, is optimized for efficiency. You are not paying the NVIDIA tax. You are paying the TSMC tax and the Broadcom tax, but you're not paying the egregious, probably 500% margin that NVIDIA is getting on GPUs. And because it's more efficient, your cooling is lower, your density is higher, your energy bill is lower. So with that said, Google is not the first place that I go to do generative AI. I go to Perplexity, and if I don't see what I like in Perplexity, I'll go to Copilot, and then I'll go to ChatGPT. And again, we're kind of this weird version of people who needs to just go directly, to the source, and we can bop across different ecosystems. But we're not normal. Normal is I'm going to keep going to Google. I kind of don't even know what this generative AI thing is. We're super enthused by, let's say 30 million paid users for ChatGPT, but what's the population of the planet? It's pretty freaking high. Sorry, I'm not going to open up that message you just hit because
don't let me distract you.
Well, the window pops open behind me for some odd reason. Microsoft has got to fix that stuff. It's so weird. Anyways, if I dial, if I dial in a little bit, I mean, they hit on pretty much every single expectation metric across every business line was a beat or a meet. I think the only thing that was red was free cash flow, but give me a break. Google's got a ton of cash, and nobody should be worrying about that. When it came to Google Cloud, my gosh, the profits they're pumping out are freaking impressive. Going from losing a ton of money to making a ton of money, and the way that was addressed on the call was scale. It's all about scale, right? And it'll be interesting to see if how long Google Cloud can keep that rocking growth percentage coming, 35%. So good job, Google. Yeah, I think you and I both know on the regulatory side, none of this stuff matters after 10 years. In fact, a news story last week said that after, I think it was 15 years, Intel won its case in the EU brought to them by all the AMD stuff.
Yeah, that's pretty wild. The one other thing I'll add is OpenAI is not going to take down Google. I'm just telling you, it's not going to happen. Market people, come back and tell me I was wrong if it does happen. I just don't see it.
Yeah.
All right, buddy, let's go on. Let's get back to chips. It's been a while since we've talked about a chip maker's earnings. AMD, different, better, worse? Pat, what's your initial readout versus the Intel report?
Oh, I mean, listen, AMD came in with a beat meet, and some people said, hey, that EPS was, they missed EPS, and the guide didn't excite people. I mean, the street was not entertained, and it's so interesting as a company, data center. I'll just talk about the quarter, and then I'll get a little commentary. Data center and client, they blew away expectations, right? Both Epic and Instinct. Zen 5 is looking really good. There was a big Ryzen 9K channel fill, Ryzen AI, and growth in commercial with more enterprise wins. Gaming, totally get this. I do not understand why equity analysts have numbers on this. I mean, the console makers didn't create a new lower cost edition. We did see in the guide that gaming is going to be a lot better because you likely have Navi 4 coming in, but you also have some new console action. So on embedded, right? Like we've said, you've said, I've said, when it comes to embedded, what you should look at is quarter over quarter growth, right? Year over year is tough given that the market's in the toilet, right? We talked about Intel was down 44%, which is just astronomical, but quarter over quarter growth is the first step, which it did. Instinct forecast didn't seem to impress, going from 4.5 to 5. But I want to dial back a little bit here. People need to recognize that literally a year ago, AI went from $0 to what's going to be $5 billion. Very similar to the ramp that we saw with Epic, but even steeper. If you look at the big customers they've pulled in, like Microsoft, Meta, Oracle, that's a really good start. The two, I don't want to call them laggards out there, but I will, are Amazon and Google. I do believe in the next 6 months we are going to see Amazon and Google latch onto AMD, probably AWS first. And I just I don't don't say that based on any inside information or conversations, but it's just inevitable in the way that Amazon works to be able to do that. So that's really the top level. I can't imagine anything less than I miss this, Dan. I'm kind of part of the problem on the expectations. I looked at them doing a full sweep of the hyperscalers, which they didn't, and I probably gave the company too much credit based on what the slides said in terms of performance. But then again, reality needed to set in. I think I called 10 billion at the beginning of the year, even though they were like zero. Just if nothing else, based on Nvidia market share in capturing 10% of that, and the company's rocking inference capabilities. What I didn't factor in was the complexity of getting them into multiple customers and potentially even the ability to ship the volume, which I think right now is not an issue. And I do think that AMD has enough capacity to meet demand.
Yeah, Pat, look, so you hit a lot of this really, really well. AI was the number. The entire reaction was AI driven. The entire reaction was instinct number driven. And I know, we had the chance to sit with Lisa, and I think Lisa did a really good job of sort of helping both of us kind of talk us both off the ledge a little bit. Cause I think we were both kind of like, how do you get to 100+ billion for NVIDIA here, that it's completely sold out here, that there's this tenable demand for AI and not see a bigger forecast rise. But this stuff does take time. And I like, really what I found most profound was kind of her overview and acknowledgement of software. You and I talk about this. I mean, we heard Pat say it about Gaudi 3. We hear her say it about, like, they're making great progress with ROCm, but I mean, the CUDA head start is meaningful. The, situation in terms of getting customers to move faster. And of course, the battle isn't only on the hyperscale front. The battle has to be fought on the enterprise front. And that's where I think there's a big opportunity for everyone that's not NVIDIA to do pretty well. The Epic numbers were good. I mean, look, CPUs, I guess the death of the data center CPU has been maybe somewhat exaggerated, and that was indicated. And of course, I think they have an opportunity from a vertical positioning. The acquisition of ZT Systems, the build out of their front end and back end networking. And I mean, they are really sort of building a stack. It's not quite as much of what I call kind of a closed loop as what NVIDIA is doing, but it is sort of there is an inherent demand that will be based on selling their GPUs, their compute, their networking, and then building their rack scale. And I think that's where growth comes. And so I think it's a little bit of a delayed fuse. I think, of course, there's always, rationalization going on. I do think that, maybe 10 was too high, but I think people would have probably loved to see even six, like just something that felt a little bit more promising, but we're seeing the same thing everywhere. And Pat, we do have to weigh in that there's this big overall growth opportunity. We see a 30% CAGR at Futurum for this. I mean, she sees a 60% CAGR. So that's loaded up with opportunities with what AMD is seeing. I mean, you're hearing more about Broadcom chips. You're hearing more about Marvell chips. They're not Broadcom or Marvell. They're XPUs that are helped co-developed with those companies, to be clear. But they're coming out with AWS, Microsoft. OpenAI announced something this week, potentially. Meta is doing some of their own silicon. The Chinese companies are absolutely, going to do their best to try to build their own, silicon with the resources that they have. And so, is that going to eat GPU market? I mean, I don't know that it's going to eat it, but I think, as you see, if you genuinely believe that the killer workload is inference and not training, which I think a lot of people do, the hardened sort of XPUs could be a really efficient way to get things done. And so these are all factors, but overall, Pat, I mean, look, it was good from AMD. I mean, it was a good result. But again, I think everybody's just kind of sitting on the ledge, wanting to hear big AI numbers. And even though it's the biggest, fastest ramping product they've ever had, NVIDIA has set an incredibly unreasonable bar for how fast things should grow. And so I want to hopefully put everybody out there that's listening to this kind of have a little bit of a ability to think about what AMD is doing, what AMD is building, and why it has some upside long term. So there you have it. I just kicked my garbage can under my desk. Anyway, all right. So
poor garbage can.
Oh man, it just met my foot. All right, I'm gonna put my foot in something else. Anyway, beep. I don't know. I'm hot. I'm hot beneath the collar. All right, so let's talk. You want to talk Apple?
Why not?
I mean, I don't know if anyone. I mean, gosh. I mean, there's all the pundits out there that are so smart about Apple. I was told yesterday. I think. I was kind of having a good back and forth with Ben Baharin, and he told me that, most people just don't understand Apple. Don't 100% know if that was a subtle dig at me or if that was a dig at the people that kind of have gotten it wrong. They did a 25-cent dividend they initiated, and I said something in a tweet about, or an X post or whatever the heck we call these days, that basically, I said, like, the lack of imagination, of a company that's got mid-single digit growth now, that's done more buybacks, I think, than any other company on the planet, and now is adding a dividend. Is this like how you're attracting investors as opposed to innovation and growth?
Isn't that what IBM did for a long time?
I do. Yeah. I mean, but that's also why it's a value stock and not considered a growth stock. So, is Apple a growth? I mean, it's trading at 33 times forward, Pat, at single digit growth. I mean, people are upset with Microsoft, which is also trading at close to 33. And remind you, like I said, Amazon and Google are trading at like 20-ish. So again, we're not an investor equity show. We don't tend to talk a ton about those fundamentals and numbers, but that's an indicator of what people think the future looks like. So that means that people really do believe that they're somehow going to be able to monetize these services and monetize off this iPhone, and that there's very little regulatory risk around Apple right now, which I think that's kind of been true. They've skirted it for a long time. But here's a bigger thing. Like, this is supposed to be the iPhone 16 Apple Intelligence go bonkers moment. And by the way, Pat, they actually did better on iPhone than we think, but we've heard about all these revised down manufacturing numbers. So I don't know, because that's a lagging, the report is a lagging number. Those rumors are a leading indicator of where things are going. I don't know that people are running to the store for Apple Intelligence. I'm hearing semi-intelligent, partially intelligent, kind of intelligent. I think it's a feature thing, a lot like the AI PC, where people need to see these features. Good news is, I kind of keep saying about Apple, is if the features come, I think people will kind of see something, an app, a tool, a capability that gets built and powered by this, the performance, the NPU and everything, and then be able to go out there and say, okay, time to get upgraded. It's just not a hardware cycle like it used to be. And that's at least my take. I've been beating that around all over. Anyone that'll listen to me, I've been sending that around. But I think this creates more of an elongation to the cycle. And I think it creates more of a patience within the buyer to not feel the obligation to run out right away and buy the new device, Pat. I don't think any other numbers matter. I'm just being candid. Like, I just don't think any other number right now really matters. When I'm looking at Apple, I'm looking at the newest device. I'm looking at, is Apple Intelligence being adopted? And Pat, they do have a tailwind that the features for Apple Intelligence aren't even starting to roll out till April, I think, April, May next year. So there's no incentive for that part of the market. But meanwhile, we're seeing China, Huawei take some share. They've been doing a pretty effective job in that market. And of course, there's that ongoing tension in that market that will certainly not bode as well for Apple as it could. I'm not super down on it. I mean, I still use it. I still love iOS. I've already claimed that apps are dead. So as far as I'm concerned, Apple has to build a killer Siri. I think people want a useful Siri. I think if Siri could be the super agent that negotiates between you and all your needs on a daily basis, it could be really cool. I just think it's not there yet. And so it was fine from Apple. Dividends fine. Buybacks are fine. Growth is meh. But the 16 hasn't met expectations in my mind. But that's, again, because the expectations need to be spread out over a longer time.
Yeah, Apple's in a precarious position. I mean, in a good position in that it has such a bunch of, I don't even know if they're dedicated followers. They just don't want to go through the pain of maybe going something different. The smartphone has become a device that is kind of like oxygen, or what's like opening up a bank account, where you might hate your bank on certain things, like, if you can't do wire transfers over your smartphone, Dan, but there's so much perceived hassle of shifting vendors that you don't want to do that. So, Apple's not the Apple it was 10 years ago, 5 years ago. It's not even close. But it doesn't matter unless Apple stumbles on things consecutively, right? And that's what we saw with companies like Sony, Toshiba, the consumer electronics wizards, or until something else comes along that is so far ahead that they hadn't invested in. But when you have Mag 7 can invest in almost anything. And then on the other side of the mouth, I'll say, well, Apple stopped investing in automotive. But if you're Apple, where on earth is your growth going to come from if it's not going to be from smartphones? And even though the company was caught flat-footed by generative AI, does it matter? Go back to the beginning of the conversation, which is the perceived hassle of moving to a new platform, at least in North America and Western Europe, are low. I'll be very interested to see outside the future of North America and Western Europe. You still there, Dan?
Mm-hmm.
Okay. Because that is where people can flip between phones, and Android has a much higher market share than in those markets. I mean, my gosh, they can flop with their AR glasses and it doesn't even matter, right? I mean, nobody cares. And until they're caught flat-footed, it's not going to be an issue. I got to tell you though, if they start to have low or no growth, it's going to start to get ugly. The pressure is going to get on, and they're going to be forced to bring something out before they want to bring something out, and that's where we're going to start seeing potentially some of the big mistakes here.
Yeah, there's a lot there, Pat. And I mean, look, it's a fun one to cover. It's fun to try to prognosticate. You and I are, I think I think people sometimes call us critics. I think we're just honest. I mean, look, other companies growing single digit don't get the benefit of the doubt that Apple do. And they're not even growing high single. They're growing like mid single, and they're forecasting conservatively. And so anyways, we got a couple more to cover. I'm on a tight timeline. I want to make sure we crush these for everybody out there.
I mean, we got 13 minutes. We got two topics.
Yeah,
can we do that?
Remember the 6.5 when that was a real thing? I thought we could cover a topic in 5 minutes. Hilarious.
6:10.
Hey, Microsoft, buddy, what did you hear? See, what did you think?
I mean, Microsoft for the quarter absolutely crushed it. In fact, if I look at the past 4 earnings, they beat on EPS more than they ever had, and they matched the March of 24 on revenue by about 1.6%. And then the market, they rewarded Microsoft by having a massive sell-off, the biggest sell-off in a long time here. So what the heck happened? I mean, it was all about the guide, and to me, right, the investors just kind of blew over, right, the second half of the year discussion and focused all on second on the second quarter. So, but I want just marvel at these earnings for a second, right? We talked about single digit Apple, right? Microsoft grew revenue by 16%. That's $66 billion. Increased net income by 14% to almost 31 billion. Oh my gosh, what about EPS? They increased it by 10%. So, good God, right? And the AI number, right, Dan? We always talk about the elusive AI number. I think the company said, hey, they're on track. I think this was back in September that for the year their AI revenue would be $10 billion, right? What other company, Dan, can you think about that has, aside from NVIDIA, that said it has an AI number of $10 billion for the year?
Yeah, nobody's saying it yet. Amazon is hinted, but they're the only ones that said it. And I keep telling people, Pat, you got to say it. If you know it, say it.
Yeah, and Azure. Oh my gosh, they must have had weakness in Azure because it's such a large business. No, they ripped 33%. We were marveling about Google Cloud 35%, which is freaking amazing, but Azure grew 33%. Likely, OpenAI infrastructure is in that. And I think the data point was that Azure growth included 12 points from AI services. So I guess simple math might be 33 minus 12. You get to non-AI, but there's a heck of a lot of AI in that Google number too. Oh, and gosh, we've seen enterprise SaaS in the single digits, with the exception of ServiceNow, right? It must have been single digit. No, Dynamics 365 was 18% growth, okay, which is rocking. By the way, not everybody's enterprise SaaS is down. We have seen ERP at double digits, and ServiceNow is rocking it. But this is all about the next quarter expectations. And what's so interesting to me is that even though their CFO has nailed almost every single thing that she has said, investors just didn't seem to buy into the second half. It's going to get better in the second half story, and I think what we're probably going to see from the company is over the net, maybe it's going to be at Chicago, or more proof point to why the second half is going to be so much better than the second quarter showed it to be.
Yeah, I mean, the why is the stock down? I mean, there was a conservatism about the guide. There was some conservatism about Azure guide. I think some CEOs and CFOs are smart enough to sometimes say, look, we have really, really fast growth. Let's use this moment as a bit of a reset. They've had a heck of a run up in the stock. Being able to continue to promise such growth, as it's always better to under promise and over deliver. You'll either take the hit when you miss, or you'll take the hit when you guide. If you're always up and to the right endlessly, you're probably on a very lucky run, but that's just not typically sustainable for long periods of time. We actually didn't talk about Meta, which had a pretty good quarter too, but Meta also got kind of punished because it seemed a little bit cautious in its guide. And again, that tends to be its way of doing things. But then it continues to beat and outperform. And by the way, Meta, what a great story for using AI. Talk about a company, Pat, you maybe asked for one that's getting dollars from AI. They're getting it actually by building it into their own products for advertising purposes and doing a pretty darn good job of it. When it comes to the cloud side, though, Microsoft is unique in being able to forecast a number and really communicate a number that it's getting from its investments in AI. I mean, Pat, we haven't talked about it much on this show, but it was another thing that, markets have been looking really closely at is CapEx. And so the company kind of forecasted that the CapEx spend is going to be somewhat similar going forward, which people kind of wonder, is that boding well for NVIDIA or not? But with NVIDIA's forecast suggesting that it's sold out of everything it can pretty much make for the next several quarters, it seems like they're going to do fine. But is CapEx leveling off? And one of the interesting things I spent some time on this week too is kind of understanding that CapEx number. A lot of us like to throw it around and talk about it like it's all GPUs and networking and data infrastructure. It's not. It's also real estate, it's thermals and power, it's leases and land. It's a lot of different things that are going into these CapEx numbers, but these companies are all in on building out scale, capacity, and data centers. And Pat, the word came out from, I think, all the cloud CEOs about capacity constrained on AI, meaning they all need more. So if they had more, they could sell more. That means their price and demand control is still pretty good. It means they're still probably able to get a somewhat decent premium. With Blackwell coming in, questions will be about H series, A series, what happens on their ability to price these things. And then, of course, how quickly do these various companies stand up their own? In Microsoft's case, Maya, new product, just coming to market. How is that going to fit into their cloud strategy? Do they make more money by vertically integrating? So much there, Pat. But it was a good quarter. Guide is always a bit of a gotcha. You hit it all pretty well, and again, got across the company. Not much mention on the Surface and AI PC side still. We're going to just have to keep waiting on that one. But the performance looks pretty good. So we'll see where that lands. Pat, we got what?
Yeah. No, I'm just marveling. And by the way, talk about marveling. I mean, let's go to Amazon, right?
Yeah, I mean, I was a little swoon, not gonna lie. Um, I tweeted some things that almost, again, I mean, I got to be neutral, but you got to be kind of like almost a little bit of a fanboy about some of the
I mean,
numbers.
I'm wondering too, Dan, with all this Mag 7 action, how do you compete as a smaller company? I
You
mean,
don't.
how?
I don't think you do. That's why I said they can buy in any market they want.
I got to tell you, current course and speed, these companies are going to get broken up.
Well,
They are.
they are, but they aren't, because
Yeah.
they will. But a ruling doesn't actually break them up. As we've seen, it takes a long time to break them up. And by the way, the interwebs, unlike telephone poles, how do you break this up? How do you break up the Apple ecosystem? How do you break up the Amazon ecosystem in a way that's, by the way, not harmful to the consumer itself? And that's why I said the bifurcation of consumer harm and competition has never had more of a diametrically opposed force right now than it does. People like iOS. They want to use their Amazon advertising. They want the benefit of its supply chain and its networks and its price efficiencies. They want to be able to use search, and they want it to work well. But at the same time, it's making it impossible for companies to come in and build things that are competitive. And you know what the litmus test will be? It'll be the perplexities. Can they actually come in with a good product, enter a market, and meaningfully grow? Can they even be acquired if they want to be? And who could acquire them? Who's even allowed to play in that game? And I don't know. So let's just hit on, because I don't disagree with you philosophically, Pat. I think you and I are aligned. I just don't know if they can actually do it, if they can actually break them up. It's the depth of the technology. I mean, Pat, these people can't even understand the code. These algorithms that run these things, like Europe's like, we think we're finding you because you're preferencing your own products. Okay, prove it. Prove that how that's working, because you got to actually be able to understand the algorithms, and then you actually have to be able to control them and know what they look like at the moment something's happening. It's very complicated. But Pat, here's the thing: is so Amazon as a whole, strong results. They forecasted, even though they had a 1 weekend less than normal between Thanksgiving and Christmas, still going to have very strong retail results.
Wait. Are we moving to Amazon?
Yeah, I already did.
Okay, well, the Chiron didn't move. I thought we were still talking about
No, sorry.
Microsoft. Okay.
Yeah, I moved. Are you with me? Everybody, don't worry.
I am
This
now.
This is like a Pat calendaring thing. I didn't give him the calendar event. He couldn't keep moving. Pat, we've calendared over. We're on Amazon now. I'm kidding.
Daniel, I think you've learned in the last 48 hours the importance of calendaring.
Yeah.
Okay, I'm just going to leave it there.
Cost us a Lambo. Anyway,
Are you kidding? A third of a Lambo.
Third of a new one, but it could definitely be a used one. Anyways, the net is Amazon. So as I was saying, they have a shortened period between the holidays. It doesn't seem to be affecting them. The retail forecasts look good. Advertising juggernaut. And that's what I said, like, what are you going to do? Break up Google and then all the ads go to Meta and Amazon? I mean, what happens? It doesn't like they're going to go to DuckDuckGo. I mean, the net of it is that we're seeing advertising move in new directions. AI is changing these platforms. People are, adding AI into these sort of social experiences, and the numbers just keep running in a really great direction. Pat, no, the AWS number, which is a hot topic, was 19%. Now, how do you sort of negotiate in your mind that number when you got 34, 35%, but you've got law of large numbers? So they actually, by the total revenue amount being about twice the size of the other two clouds, they actually grew by the same amount of billions, but they didn't grow by the same amount of percentage. And inevitably, that means market share gains. Now, we also know that nobody reports the same way. Amazon doesn't stuff its number with a whole bunch of its own product. It doesn't have its own big cloud, productivity application suite that are all in their numbers. And so that's a little different than the others. And that's obviously impacting growth, that they don't have that all inside of one number. And by the way, when you look at Microsoft's intelligent cloud number, it's more like 22% versus its Azure number, which is bigger because it contains more parts. That's been a problem for a long time for people to understand. It remains a problem. But Pat, let's put the growth aside. I think that there is obviously, people are not going to be, people are loving this number, but people will always use the comparisons in some way to talk about market share. But what about the profit margin? 38%, Pat, on a $27.5 billion quarter, they made $10.5 billion in profit. Now, this isn't like hawk tan good, but it's getting there. It's really, really good income contribution from its cloud business. And, there was other things. I think Andy Jassy said on the call, don't quote me, I think he said triple-digit % gains in AI impact. I just don't know what the baseline is for that. So, we had the $10 billion number from Microsoft. What I want to hear is, what does that mean? Because, it could be like it went from $1 to $3, and that's triple-digit percent growth. We know that's not the case, but what I guess I'm getting at is between hardware, software, silicon, instances, cloud, serverless, all the things that they're doing where AI is impacting their businesses. What does that number look like? I'd really love to know that. You actually spent time with Matt Garman twice. We got him on our pod. Check out that episode if you haven't already. But I'm going to leave it here because I know we're at time, and I need to give you a few minutes to chime in on this too. Pat, it was a really good quarter. Amazon is a juggernaut for sure across the board. And to your point on the last one is these companies are so powerful, they're so strong, and they're so diversified. It's hard not to like them, especially because they trade at a much lower forward than, like, say, Apple.
Yeah, I'm going to focus on AWS here. Just, those margins are astronomical. And I remember, my mental model has always been 30% op inc, but, the 30, 39%, 38% is just completely astronomical at a point that you're investing. And I know R&D is below the line, but there's a lot of expense above the line. What are you smiling at?
I just saw a funny thing pop up.
Okay, a lot of investment that goes into COGS for AI, and I actually met with Andy. Sorry, not met with Andy. Matt Garman on Monday. There are some things I can't talk about. There are some things I can talk about, and we did talk about the growth rate and the law of large numbers. I mean, if you look at the quarterly increase that they have. Either year over year or quarter over quarter, it is larger by a very large factor of any of their next closest competitors. But the fact that they ripped out the growth that they did, given that scale, is pretty amazing. I do think that Microsoft got the jump on generative AI. AWS got the jump on Microsoft for machine learning. They have more machine learning customers than Microsoft. I also think, I appreciate you correcting me in a podcast that we did, where I said, "Hey, generative AI is a marathon," and I think you said it was a sprint, or you reminded me
it was a race.
It was
confirmed that marathons are races.
Yeah, no, I appreciate getting checked by you live all the time. But
does that hurt your feelings? You gonna be okay? I know you're skinnier now, but don't be small. Okay.
I need my mommy. But anyways, let's just say that AWS or Amazon was later. Doesn't matter. When you're Microsoft and you jumped on the AI bandwagon, freaking intelligent, way to get this going. As we talked about Google, they essentially invented generative AI with the first research paper on it. Had a lot of stumbles, decided not to get into it. But people shouldn't read too hard into this AWS late with generative AI. I think it is noise. Now, by the way, that's not to take anything away from Microsoft. They deserve a lot of freaking credit for that. I just don't know long term if it's going to.
And let's be clear, Pat. There is a buy, build, and sort of hybrid model. Microsoft was smart on the buy of buying their way in with OpenAI and being able to go really fast. Google built, and Amazon kind of is doing something kind of in between, because it's been building silicon and building network and building so what I'm saying is each just sort of take a different approach.
Got you. Yep. All right, Dan, I'm going to shut up and get you to your big corporate meeting.
Yeah, I got a lot of corporate meetings this morning. Very excited about that.
By the way, I do too. I got to run.
It's fun to be in corporate meetings. I feel like it's way better than, talking tech with my bestie. But in all seriousness, everybody, thank you so much for tuning in to this episode. We covered we got a lot of it. I would have liked to have been able to dive into Meta, like I mentioned, Commvault, some of the other smaller tech companies that reported. There was some good stuff in that, but we do what we can, Pat. We can't cover 6 topics in an hour anymore. We are just so full of it. What can we say? Anyways, hit that subscribe button. Join us for all of our other content. Be part of our community. We appreciate all of the viewers here on the 6-5. See y'all later. Bye-bye.